All right. Hey, everyone. It's time for round two of my streams today. Hey, Grego, how are you? Cool, cool. Thanks for joining. Yeah, so if you were not here earlier, I had my AM stream. I was a little bit behind. I started at like 10 a.m. It was supposed to be 9:35 or whatever, but I had technical problems, of course. So, but we got away with a tiny little bit of green, which I'll take. But you should check out the stream because there's always valuable training lessons in those AM streams, which I do Monday, Wednesday, and Friday. And the whole point of that is I'm trying to advance that Apex account so that I can beat the evaluation in a sustainable way and take payouts from the account, right? That's the whole point. And I'm trying to demonstrate that it can be done with a tool like the Trade Scanner Pro in a sustainable way. That's the key part, sustainable. Because yeah, we can employ gambling techniques and we can beat the eval in a couple of days, but what good is it if you're going to blow the account anyway, right? That's the whole point I've been stressing. Anyway, but in this session, we're not going to do that. In this session, we're going to do analysis and forecasting. And it's important to do this at the beginning of the week so that you have an idea of what to expect. All right. So typically, how this works is this: first, I review the economic calendar. Then we take a look at the markets. Like we'll start with Bitcoin. We could take a look at the NASDAQ. We could take a look at maybe there's some markets you'd like to see. So you feel free to share the symbols in the chat and I will take a look at those. And then what we will do is we will use the Trade Scanner Pro to find swing trade ideas. We'll see what swing trade ideas align with our analysis and see if there are any trades that are in play. And because the thing is, when you're dealing with the Trade Scanner Pro for swing trades, often you will find a signal that is present. It's there. And sometimes you could get involved in it at another point if the market offers the opportunity. So we'll talk about that. It's the same concepts that I show during the day trade stream, except it's on larger time frames, which means you typically have to wait longer periods of time. But like, for example, if the market pulls back to the entry price, they can give you another opportunity to enter that trade, for example, like on an hourly chart. So you may have to wait a day or something, but if it goes back to that price, you may have another opportunity to get involved in that trade if it aligns with the analysis. Remember, the analysis is first. The signal is secondary. If the signal pops up first, but you haven't done your analysis, you don't take the signal. You do your analysis first. All right. So, what is more probable to happen in the market after wave five? Yeah. So, yeah, I'm going to answer that question, Grego. That's definitely one of the things I want to address. So, before we get into that, again, if you like my stream, do me a favor, press the like button, subscribe to the channel. Here, let me put my little button here. Where is it? This one over here. Do me a favor, subscribe, press the like button. If you're watching on Twitter, please do me a favor, retweet the stream. That's helpful, at least. It helps me on Twitter. And speaking of Twitter, let's see the. Oh, man. Dude, I don't know why I do this. Oh, these numbers, man. I honestly don't know why I do this. I could be working my real accounts right now. So anyway, but no, I appreciate the people that do take the time to watch me. But I can hear I made a lot of new connections over at the ICTC 2025, and some of these guys were very well versed with how to navigate, things like YouTube and Twitter and all that. And I know what they would tell me. They would probably tell me, "Dude, you're wasting your time." They're probably right, but I have to keep trying. Anyway, if you're not familiar with ICTC 2025. That was the International Crypto Trading Cup that I hosted. Okay. It was in the country of Andorra. If you've never heard of that country, Google it. And it was really a lot of fun. I put a link in the description if you want to watch the replay. It was 2 days, 6 hours a day that I had to talk. And I had co-hosts with me. And there were 8 traders that had to compete for the cup. And you get to see it. It's a great learning experience. And really, it was a lot of fun. Check out the link. And do me a favor, if you watch those videos, go on there and put a comment and tell them that or put a comment to me and say, hey, Mark P. Markets, great job. Loved seeing you on here. It lets them know that my people are watching. Okay. So anyway, if you could do me that favor, that would be cool too. So the link is in the description for that. I'm going to actually I'm going to include the link on this screen as well, because I want people to see that it was the first of its kind, this type of competition. And it was really, really an aggressive move by Whitebit. I mean, these people that operate Whitebit, they have a very, they think big. Let's just put it that way. And working with them was a pleasure. These people work hard, and they really have a grand vision. And with the way they do things, they're going to get there, man. That's all I could say. They're very determined, and it was a pleasure working with them. So anyway, all right. So let's move on. Let's talk quickly about the economic calendar. So sometimes, I'll just comment on the economic calendar. Hey, Howard, how are you? Other times, I like to leave it up to you to see if you're doing your homework. So today is one of those times. Have you guys checked the economic calendar? You should. It doesn't matter which one you check, but you should be checking one at the beginning of the week because you want to be prepared for scheduled economic events. So here's my test for you. What economic events are scheduled for this week that you think carry weight, that are more important? Because when you check an economic calendar, and this is why I run through this exercise, when you check an economic calendar, there's a lot of stuff on it. And the majority of the information on the calendar is pretty much unnecessary. It doesn't move markets. So you don't need to really take it seriously. But often there are maybe one or two important events, especially if they are US based, that you need to be acutely aware of, especially if you day trade. Because if you're not aware of and you're in a position and the news comes out and you're on the wrong side of it, it can spike against you dramatically. So you want to be aware. All right. So anyone want to help me out and chime in and let me know, what events do you think carry weight this week? Anyone want to be bold and share it? And don't worry, like if you put something that I don't think is that important, that's the whole point of this exercise. So that I'm teaching you, this is what you should pay attention to, and this is what you should not pay attention to. So guys, do me a favor, check out the economic calendar and tell me here on the chat, what do you think, what economic events do you think are important today? I'll wait for some responses here. And while I'm waiting for that, I'm going to remove these moving averages from this chart here because we don't need those. And this is Bitcoin. We're going to get to this here in a moment. Anyone want to chime in on, come on guys, help me out, man. No one wants to tell me about the economic calendar? Come on, don't be lazy. What events do you think are important this week? Man, I miss the old days when Steen his name is Stain. I keep calling him Steen. Pronouncing his name wrong for 2 years. When Stain used to come to the chat, I used to ask a question and he'd be out there in 2 seconds putting all the stuff. Powell speaking. Howard. Okay, great. Tell us a little bit more about that. When is Powell speaking? Is it just a speech? I would imagine, because the next FOMC meeting is in June. On the 25th, okay? And, well, that's not this week, is it? No, that's not this week. That's next week. So what about this week? We're only interested in this week. When you check the economic calendar, you only want to know about this week. So are there any events like, let's see. Well, we probably had the CPI report was the previous week, right? We had, I believe we had an FOMC meeting. Was it the previous week as well? Or maybe CPI is this week. Nothing with too much weight. So no CPIs, no PPIs, no FOMC meeting minutes, no, what's the other one? Core PCE. How about that one? Let's see. Grego says, hold on, let me just put this bigger so I can see. Man, I need glasses. Okay. May 23. Is that this week? I don't think that's this week. No. Okay. So again, this week only, not next week. This week only. So you guys are looking at next week. Next week is irrelevant. Today's Monday, right? So you have a whole week. We want to know what's going on between now and Friday, not next week. So like this thing with the CFTC speculative net positions, that's not important. That means nothing. Okay, does not move markets. We are only interested in events that move markets. So I'm going to tell you right now. Okay, PMI on the 22nd. Okay, so that's this week, right? Today, so the 20th is tomorrow. So that is what, Thursday. But is it a U.S. number? Because sometimes you may see like the British pound has their PMI or whatever, right, or their PPI or whatever, right? So, what is it? Is it the US? Because I'm going to be honest with you, the most important economic reports are US based. Okay. It's not because I'm based in the US and I think that we're better than everyone else. That's not the reason. It's because the dollar is the world reserve currency. That's a fact. And whatever economic reports come out that affect the dollar affect everything. That's just the way it is, man. Okay. Um, Okay. So again, now something like that, the purchase managers index, again, not a big number, not a big number. And that's why we're going over this. I want you guys to be aware. So the major numbers, the major economic events that you want to be aware of are CPI, PPI, core PCE. These are variables or reports that the Federal Reserve uses in their analysis. That's why people make such a big deal. Okay, existing home sales. That if you know what, if there's any dramatic changes in that, that could be slightly in effect, but usually existing home sales is usually like these things are like seasonal. Sometimes people make a big deal out of them, and sometimes they don't. Right now, that's not really a headline number these days, right? So anything that's inflationary, anything that measures inflation is really key. FOMC, if Powell is speaking, or anything like core PCE is a big one, which that's like a newer one because no one ever cared about core PCE years ago. But it's core personal consumption expenditures is what that stands for. The Federal Reserve uses that number, right? So that's why people make a big deal. All right. So initial jobless claims. Christos, when is that? Initial jobless claims. That's usually, so when it comes to the jobs report, which is non-farm payrolls, which is a big one, that's usually the first Friday of every month. We've had that this month, right? So then, yeah. So this week, so my point is, I mean, I know I'm taking a really long way of saying this, but there's not a lot. There's no heavy reports this week, right? So that's a good and a bad thing. It's good because you don't have to worry about volume tapering off going into the report. Okay. What is that? The initial jobless claims is on Thursday, and that's this week, because usually that number comes out the same week as non-farm payrolls, typically. And non-farm payrolls is typically the first week of the new month. It's the first Friday. So, but okay. If that's the case, again, that's not as heavy as non-farm payrolls. Also, there's like ADP on employment change that usually comes out like a day or two before non-farm payrolls. Those can have an effect, but otherwise, I wouldn't worry too much about initial jobless claims. So there's nothing really major this week. Okay, other important reports that you may see are like if other central banks, ECB, Bank of England, whoever, Bank of Japan, if they have their interest rate announcements, right, or their interest rate meetings or whatever, just like our FOMC, those can have an effect on specific forex pairs if you trade forex. Otherwise, they don't really move the dollar, okay, unless there are major surprises. What we're interested in with the economic news is what can move the dollar, because whenever the dollar moves, then what happens? The bonds move, and when the bonds move, everything moves. The bonds are like the beginning of the game. So that's why it's important just to be aware, so that if you're in a position or something, and the market has a range expansion, you have an idea of what's going on. And sometimes it's wise to lighten up positions going into such news, like FOMC, for example. Let's say you had a position with a profit and you're going into FOMC. Let's say it's tomorrow, okay, for example. it might be a good idea to take some money off the table, because what if that goes the wrong way on you? There's no way to know. So maybe you want to hold on to some, but then you want to give some a chance. And maybe the news comes out in your favor and it goes even further. Great, but there's always the possibility that it can go the wrong way. So the game is all about mitigating risk, not about I'm going to be rich and I'm going to maximize my profits and I'm going to be a billionaire and I'm going to ride my Ferrari. If that's you, you're in the wrong game. This game, to be successful and to be consistent, you must focus on mitigating risk. That is the key to the whole thing. Good risk management leads to a growing account, right? Profit is a byproduct of good risk management. Put that in your notebook. All right, so enough talk about the economic calendar. Thanks, guys, for participating. Maybe one of these days I'll do like prizes or something for people that help me out with the economic calendar. That would be cool. Maybe I should do giveaways, and then maybe more people will watch me. Anyway, so let's talk about the Bitcoin situation, shall we? That's the chart that I have up here right now. I wrote my analysis yesterday on TradingView, and in my analysis, I wrote, because again, the whole point of TradingView, I don't actually give away specific trades in those reports. What I'm doing is I'm trying to give you perspective for the week ahead. That's my goal when I write those things, giving you an idea of what scenarios are likely and what side you should be leaning on. That's basically what I do. So, for example, if you read the report and I'm saying you should be leaning on longs and you're using the Trade Scanner Pro, that should be enough information for you to say, okay, on my hourly chart, I'm going to look for support levels, and I could see if signals pop up near support levels, then I should be leaning on the long side. That's how you use information like that, rather than specific trades, because it's very hard to come up with specific trades at the time that I write that article, because I write it at a specific time. And if there's no trades, there are no trades. So that's why I do it like that. Anyway, so in the article, I wrote about this particular breakout, because at the time, the candle was strong, right? And in the article, if you read it, I said 106K breakout, we're on our way to the 113 resistance. That's this line up here. See this line up here? Resistance. That's the resistance line. That line has been on my chart for months. So this was a very, very tricky move. This is the daily time frame I'm showing you. Very tricky move, because we got the breakout. We got the 106K breakout. Can I get an arrow? We got the 106K breakout here, but what's the first thing that it does? It gives us a red candle right after that. That is a fake out. It is tricky. This is why I tell people it's wiser to work on smaller time frames in such situations. If you take the breakout, you have to be very in tune with the risk. The risk in this situation is pretty steep, especially for swing trades, because look, you have this consolidation right here. These type of consolidations are momentum continuation patterns. That's what that is. So when you get a breakout, it's likely to continue. But look at this. You got an outside bar, a red outside bar, which broke the lows, which could have easily stopped you out for like 3,000 points. And then it turned around and it's giving us this hammer, all right, which is also a bearish pattern at such a location. So my point is, when you take a breakout, people ask me all the time, they say, well, how do you know it's going to follow through? You don't. That's called uncertainty. Remember, markets are random. If you still have not embraced that idea, you better do yourself a favor and embrace it. Otherwise, you're wasting your time in this game. Markets are random. So there's no way to know if this will follow through. You have to take a chance if you're interested in the idea, right? So the art of this game, as I always point out, is adjusting. If this breakout was truly going to follow through, first of all, the candle should have closed strong, which we have a strong close on yesterday's candle. Okay, great. The next candle went higher. Okay, great. But the next candle should be looking like this. It should be green. Okay? The next candle should be looking like this. That is what it should look like if it was strong. But that's not what we have, do we? We have this red candle. So when you see the red candle like that after the attempted breakout, that's a red flag. That's not something that says momentum is following through. So in this type of situation, for one, if you're not stopped out yet, you should be maybe trying to recover whatever you can. Um, you know, you should be, or just stay out of this thing completely. But this is very tricky because you have the failed low right here on a smaller time frame. This is a failed low, and it's trying to reverse. So this thing is still bullish, actually. It hasn't broken any supports. So another mistake you want to avoid here in this fake out situation, like this is great for day trades, okay? Actually, all this action, whether it's bullish or bearish, great for day trades. A lot of action there. But swing trades, you don't want to start shorting this now. This is not a short. It looks may, oh yeah, failed high, blah blah blah, but this is not a short. Okay, it's if you take that short, it's extremely aggressive, especially with this type of candle. So here's how you could basically play this as the week continues to unfold. If the next candle does this, that's a sign of strength. That means this red candle sucked in a lot of shorts and they're going to get squeezed. Okay, that's typically what that means. If you get a bullish close tomorrow, like this, right, a nice strong candle, and it breaks those highs, that's continuation. So you don't have to trade this on the daily time frame, but you can use the daily time frame as a guide, and you can work the smaller time frames like 30-minute, 15-minute, stuff like that, and work on the long side in such a situation. Does that make sense to you guys? That's very important to understand because my roadmap, I'm still anticipating a test of 113 because there's nothing bearish about what's really going on right now in the bigger picture. There's nothing bearish. We refuse to break supports, all right, and all that. Now, are you guys clear on that? That's my general outlook for the week. Does that make sense? Tell me if it doesn't make sense because then I'll review it again. But if it makes sense, what I'd like to get into next is the wave count, because there's a couple of notes that I want to review here about the wave count, which are very important because I made some adjustments to the wave count. When you're dealing with wave counts, making adjustments is a regular thing. These things are not permanent, right? As the market gives us new information, we have to adjust wave counts. That's just part of the deal. I know people don't like that, and people say, well, it's so subjective. Well, that's one of the things, that's one of the drawbacks to using wave counts. But when you are aligned properly, it really gives you a valuable roadmap and keeps your expectations in line. That is the great thing about wave counts. Okay? So you guys clear on what I'm saying so far? You guys clear? And also, it'd be helpful if you gave me some feedback and let me know, like, does this information, do you find it helpful for your own decision making, what I just shared with you? Or is it too vague? Let me know. If it's too vague, let me know. Because again, my whole goal here is to provide value. I want you to walk away from the stream, be like, oh, I got some good information from this stream. Like, I'm much more confident, I'm better prepared, I know what to expect now, and I feel more aligned with the market. That's how I want you to walk away from the stream. Not what was all that about? I'm confused. You understand? So let me know. Let me know in the chat. Okay, I don't see anything in the chat, but I want to talk about the wave count. So do you guys want to hear about the wave count, or do you want me to continue? I think it's actionable information. Okay, cool, A. Cool. Thank you for the feedback. Anyone else besides A? I mean, I know he's not the only one here, right? Or maybe everyone else is a bot. Let's see. Okay, guys, a little pickup on Twitter over here. By the way, Twitter people, if you're watching on Twitter, do me a favor. Please help me out and retweet my stream, because that's the only way I know, like, there's other things I have to do to really whatever, but any little thing that you can do to help me, like, I would appreciate. And it's just a matter of pressing a button. So thank you in advance for that. All right, so let's move along. Let's talk about the wave count. So question earlier from Grego, right? I think it was Grego. Was it Grego? Let me go back. Yeah. So I'm going to put the question up here. So Grego asks earlier, is it more probable to happen in the market after wave 5? All right. This is very important. Wave 5s are the conclusion of a impulse wave. That's usually, in other words, it's usually the top. Okay. Now, wave 5 can extend, and there's no way to know where wave 5 will complete. But here's how I use this information. If I can identify clearly a wave 5, it means now that the potential is becoming more and more limited. It's hard to understand. It's not intuitive, but you have to understand something. All the people that were going to buy in this cycle have bought. That is what wave 5 typically signals. Wave counts are a reflection of human sentiment. So usually what it means is the market looks its best, it looks its safest, and the risk is highest. So when you're in a wave 5, you don't want to have the mentality of this is just getting started. You want to have the mentality of I should probably be booking profits. I should probably be more conservative. I should be reducing my size, reducing my risk, not being aggressively long. If you read Twitter and you read YouTube and all that other nonsense, morons on there are usually saying, well, this thing is just getting started. We're going to break out. We're going to go to 200K. This is what attracts all of the morons, the dumb money. You do not want to be part of that. Now, like I said, it's not like a precise thing. It's just a general thing. So when wave 5 completes, the probability of a corrective wave following is very high because when wave 5 completes, it completes an impulse. So let me show you what that means on this chart here. And then I'll talk about my relabeling. So we have an impulse here, okay? 1, 2, 3, 4, and this I suspect is the mini 5. See, I have it in Roman numerals. And then when it gets up here to 113K, if it can get there, then most likely we have a broad wave 5 completion. I'm going to tell you why that's important, but this would be the impulse. Knowing wave counts, right? So far, this meets all of the rules of an impulse wave. So the probability of this thing with one more leg higher is high. That's great for day trades, great for swing trades, not so great for investing. So please keep that in mind. So what happens after wave 5? When wave 5 completes, typically you get this type of situation right here. See this? I actually had this wave originally labeled as a wave 5, but I was wrong because this was the fourth wave. This consolidation back to 76K, that was wave 4, and this is the fifth of the fifth. Now you say, well, what does that mean? Let's go to a weekly chart. And if you're not familiar with wave counts, Google it. There's lots of information. This is the big picture. And this is where I had done some relabeling, right? So this is the big picture. This is very important to be aware of, especially for investors and long-term people who think, I'm just going to hold it till it goes to 200K and I'm going to be a bazillionaire, especially for you people. So this was the original wave 1 back. Oh, my head is in the way. Okay. This was the original wave 1 back here. See that by my big head? See that? That was 2017. That was wave 1 on the bigger picture. Then we had wave 2. Wave 2 is typically consolidation like this. Wave 2 prolonged itself. It lingered for 2 years. That was wave 2. Followed by what? Wave 3. Wave 3 is typically a very dramatic wave that gets a lot of attention. This is typical wave 3 right here. All right. Then we had this situation. This was very tricky, this situation right here, because it's like, okay, is this a wave 4 into a wave 5? Or is this entire area just a wave 4? Right? Because wave 4s can make a higher high. And at the time, if you go back to my analysis at the time, because I was writing on TradingView back then as well, I said there's a chance that this is a wave 4 still and it makes the failed high. I specifically wrote about that. And we went from 70K to 15K. So that right there is a wave, this entire structure, okay? This entire structure, we can argue, is a wave 4, which is a compound corrective wave. There are many corrective waves inside of this corrective structure, right? But what makes this confusing are the bullish parts. This part right here, that's very confusing because you're like, this is corrective. It's on the side of the trend. Well, but it barely made that higher high. So we can only make this assertion after the fact. Very hard to do while it's happening, especially when you're constantly faced with nonsense all over, TikTok and Instagram with all these geniuses and what's it called? Twitter with all these geniuses who think they know everything, right? They think they have the market figured out. No one has the market figured out. Only people with inside information have it figured out. Anyway, so we went from 15K, right? 15K to basically where we are now. So if I'm correct and this was wave 4 over here, that means this gigantic impulse from 15K is one gigantic wave 5, broader magnitude wave 5. In that wave 5, we had our first wave right here. That's wave 1. We had our second wave right here. That's wave 2, typical consolidation. Then we had our dramatic wave 3 right there, right? Then we had the test of 76K. That's the bottom of wave 4. And we've been in wave 5 ever since. And that's this little substructure with the Roman numerals. I believe this is the 5th leg of that. Do you see what I mean? Do you see how that plays out now? If this is true, and wave 5 finds its peak maybe at 113K, typically wave 1 and wave 5 have a relationship in terms of proportion, typically, right? So if that's wave 1 and we project that from the bottom of wave 4, so there's some more potential beyond 13K, 113K, right? So this thing can extend as high as 130K before wave 5 is complete. So wave 5 can linger for a while and it can extend itself. So you have to realize that just because we're in a wave 5 doesn't mean it's going to turn right away. So one thing I would not do is go short. Does that make sense? Are you following me so far on that? Wave counts could be confusing. So what wave 5 tells us is that the potential is becoming more and more limited, and risk is going to become more and more elevated as we start pushing these resistance levels. In this type of environment, I usually recommend highly working on smaller time frames because you can manage your risk more effectively. Working on a 4-hour chart, working on a 1-hour chart. If you're wrong, okay, you're going to get stopped out, especially if you're using the Trade Scanner Pro. You have a nice, well-defined risk, and you can work with that. And if the market wants to extend and linger higher, you protect yourself from the broader magnitude of risk. So what does that mean exactly? What is the broader magnitude of risk? Well, the corrective wave. What kind of corrective wave can we see when this wave 5 completes? Okay, that completion could be 113. That completion could be 120. That completion could be somewhere between 113 and 130, anywhere in between. So we have to wait for confirmations of the bearish reversal in that type of situation. You don't sit there and assume just because it's at 130, okay, this is the top, it's going to turn. We don't know that. The market has to provide the evidence. All we can do is have an idea that, okay, there's a greater probability that this reverses. So as an investor, for example, let's say you buy it now and this thing pushes to 120. You should seriously be considering taking something off the table. Reduce risk in those situations, even though it's looking its greatest. Does that make sense? I say this over and over and over, and people just don't listen, okay? And when we had the previous alt season peak way back in 21, I was saying it, and people were looking at me like I had two heads. They're like, oh, but this thing is just, Cardano is going to go to 100. Yeah, okay. We saw where that went. Anyway, so that's the thing. Now, my point that I want to make is, if this completes, let's go back to the weekly chart. If this broader impulse completes itself somewhere between here and 130K, right? This is where we have to be aware of the bigger picture. This entire structure, right? Starting from here, starting from the original wave 1, this entire structure from here to here, up here, let's say it peaks up here somewhere. That entire, structure is one gigantic wave 1. Do you understand? Waves are, what do you call them? They are they're fractal, meaning you can have smaller versions of the larger wave. So all these impulse waves together would equate to one gigantic wave 1. Do you guys understand that? So if we have a gigantic wave 1, let's say it completes up here somewhere. Okay, let's say it completes up here. And we have a gigantic wave 1. What comes next? What wave comes next? Wave 2. Wave 2 is a corrective wave. Now, On this magnitude, you have to understand something about wave twos. Wave twos, theoretically, can correct 100% of wave one and still be part of a bullish impulse. I'm going to say that again. In theory, wave twos can correct 100% of wave one. So, what that means is Bitcoin could potentially pull back to here, okay, in a corrective wave two on this magnitude. That sounds really out of unreasonable, right? That's really far fetched. And I agree. Just because, theory doesn't mean it's actually going to happen. But that's the theory. So the way I take that is that's the potential risk you face, especially if you're buying it at 130 or whatever. You're risking that type of you're taking that type of chance. Now, what's more realistic is like a broader 382 retracement, right? So we could use the retracements, and we could go from here to here. We could do something like this, right? Assuming that wave five completes up here somewhere, and that would put it back at like a 50% retracement would put it back at 61K. A 382 would put it around the mid 70Ks. That would be a potential wave two on this magnitude. Okay, but it can give back. Now, if Bitcoin goes to 130, then a 50% retracement is what? 65K. So that's a wave two. That's a more realistic wave two. And that doesn't unfold in like a month. That can take a year or two to unfold. Does that make sense to you guys? So that's why I wanted to go over this wave count stuff, because it's all about managing risk. Right now, so I just gave you a pretty bearish scenario. The funny part is when I was at the ICTC, my friend there, one of the co-hosts, Gert, from the Netherlands, he had a very similar forecast using the wave counts, and I was like, huh, and the guy is an engineer, by the way, very, very, very smart guy, and he had a similar outlook. So I was like, that's very interesting that we kind of have a similar conclusion. But he's looking at the wave counts. So it's the same idea, right? Do you guys follow that so far? Any questions? So don't be misled. I'm not saying that that's a forecast that will happen. I'm not saying that. What I'm saying that is that's the risk you face, and that's especially the risk that investors face over this move, like whatever, maybe possibly 113. I don't know where wave five is going to complete. 113, 120, 130. I have no idea. This is where you have to use your knowledge and your techniques of trend and momentum and levels to confirm movements as this thing works its way higher or possibly shows signs of reversal. Signs of reversal on this magnitude look something like this. Major double top situation, right? That kind of thing. So if we go to 120, for example, and we start gyrating around for a few months like this, that could be it, right? That could be it. If you go back in time, right, and we go back to like what previous peaks looked like, look at the weekly, right? Look at the weekly. Look at the peaks back here when we had this wave four situation. There wasn't really much of it fooled around for a few weeks. You see that? And pretty much there was no time being wasted there. All right, I'm missing all these chats. Hold on. Let me go back. Okay. Existing home. I'm going back. Okay, hold on. I missed all your chats here. Okay. But I don't like it, but your stream always useful. I know what I should. Okay. But I don't like it. Okay. Are there any, how you trade this versus now? Oh, yeah, that's a good question, A. I'm just getting back to your chats here. Hold on. So A is asking, are there, and how you trade this versus NASDAQ on small? Well, yes. All right. And I'll explain that here. And then Christos says, let's see, what is your opinion on Ethereum and other major altcoin? Can they reach their highs again? Well, that's going to depend on, I believe, if Bitcoin leads the way. Right now, usually people, this is where people like to get into Bitcoin dominance and stuff like that. And I believe in order for the altcoins to have their time, Bitcoin needs to pull back a bit, right? The Bitcoin dominance needs to cool off and people need to be buying altcoins. Maybe we see that sort of thing, but the way I've always used the relationship is Bitcoin, I view Bitcoin as like the S&P. Bitcoin makes higher highs, altcoins should follow, right? That's how I see it. That's how I've always looked at that relationship. So if Bitcoin's making new highs and the altcoins are having a hard time, maybe they need a little time to catch up, or that could be a sign of relative weakness. We could take a look at Ethereum, but I expect them to behave in similar ways, right? With Bitcoin being the leader. We'll take a look at Ethereum before we wrap the stream up. Now, so A asks a question here, and he wants to know: do I trade? Like, how do I use this information? And do I use it in a similar way to the Nasdaq? Well, when it comes to smaller time frames, this information that I'm sharing here is really nothing more than a general roadmap. So if I'm anticipating my roadmap right now, that's why I draw this illustration right here. If I'm anticipating that the market is generally strong, this is going to help give me a bias on my smaller time frames, because I'm going to say, okay, I'm expecting bigger picture bullish. So if I'm expecting bigger picture bullish for now over the next couple of weeks, then support levels should generally hold, resistance levels should generally break, unless the market proves otherwise. So I'm going to lean on the long side in general. I'm going to be expecting higher lows. Now, there'll be consolidations, there'll be some minor bearish movements, but in those bearish movements, if we're not breaking any lows on this time frame, then those bearish movements should be viewed as buying opportunities. So if you're working like on the 5-minute chart, the 15-minute chart, and we'll look at smaller time frames here soon to see if we could find anything in line with that, right? Because Bitcoin is generally bullish. That's the analysis. So if that's my analysis, now I want to see if I could find smaller time frames that align with that. And maybe the Trade Scanner Pro has a signal that aligns with that. Because remember, my analysis comes first, then the Trade Scanner Pro signal, as a reminder. Okay, Miguel, is token pre-sale? Okay, is this a bot guy again? Come on, man. Stop with the bot stuff. I'm gonna block you. All right, we don't need to know about that. I don't think I can. This platform doesn't let me block people. I don't think I could block him. Ignore that guy. All right, so you guys understand. So A, does that answer your question, A? This bigger picture, the reason why I do this is because it gives me a roadmap. The reason why I even bother with the wave counts is because it gives me a roadmap, right? Impulses have to have 5 waves. That's their typical formation. And remember, impulses, this is all a gauge of sentiment. That's what it is. Sentiment drives markets, nothing else, especially on the short term. It's all about sentiment and perceptions of the future. If the impulse structure stays intact, which right now it is, because wave 4 it's not even anywhere near wave 1, that means wave 5 is highly likely, this subwave 5. If subwave 5 is highly likely, then I should be bullish. I shouldn't be bearish. People that are shorting this now are shorting it too early, because we don't have 5 waves. We should have 5 mini waves in here to, smaller magnitude mini waves to at least before we even think about looking for shorts, if we're going to be contrarian, right? But I would not recommend that until we get formations that confirm the bearish stuff. We won't get into that now. I don't want to confuse you. Make sense? So that hopefully that answers your question. Let me know if that answers your question. Now, let's take a moment here. Let's take a look at Ethereum, because I want to spend a few minutes looking at signals as well, so you guys understand how to use a Trade Scanner Pro on larger time frames, which I think is realistic for most people. So let's go to ETHUSDT. All right, let's see what comes. So here's Ethereum, right, on Binance. This is Ethereum. And now, compared to Bitcoin, I mean, Ethereum is relatively weak to Bitcoin, in my opinion. So we go to a weekly. It's better to use the weekly time frame, right? Bitcoin is on its way to new highs. It's very close to new highs. We're fooling around 105K, right? 109K would be the all-time high. Ethereum is not even close. Look, that's the all-time high in Ethereum. We're not even close. That's relative weakness, in my opinion. So if Bitcoin finds its top sooner than not, Ethereum's in a position to sell off, not really continue. So unless these things can play catch up, this chart is a consolidation and it's relatively weak. We can take a look at the Bitcoin Ethereum chart, right? Or we could look at Ethereum in terms of Bitcoin, right? ETH, what is that? With that BTC? Can we see that like that? Yeah. Okay. And this shows us, this here is the Ethereum in terms of Bitcoin. That's not, does that look strong to you? I mean, that's relative weakness right there. Look at that. At one time, look, it was relatively strong to Bitcoin, but it's been struggling. So not a good sign, right? Ethereum in terms of Bitcoin. Ethereum is not performing well in terms of Bitcoin. It doesn't mean it can't play catch up, but you want to see resistance breaks on this chart. You want to see that will signal some changes. But until then, I don't know. I wouldn't be very optimistic about Ethereum, at least not on the bigger picture. Smaller pictures are another story. I wouldn't get mixed up in the relationship on the smaller picture. Don't be confused. All right, does that make sense? Yeah. So that's a sign of relative weakness, and a lot of coins are in that situation because they're ERC20 tokens or whatever, so they're kind of going to be sensitive to Ethereum. Like, what's another one? What's another ERC20 token? I don't know. You guys tell me. Let's take a look at a quick one. We'll take a look at like XRP, for example. Okay. I'm not sure if this is ERC20, but we just want to see, for example, its relative strength or weakness in terms of Bitcoin. Now, this is XRP against the dollar, but my point is Bitcoin is near all-time highs. Is this? We're looking at this is a daily chart. Is this near all-time highs? Let's take a look at a weekly chart. Is it? Let's see. Let's zoom out a bit. Yeah, actually, it made a new all-time high. I guess this was the election, right? It made an all-time high. See that? So that was the election move right there, the U.S. election, which got that thing going. Okay, so that's more in line with Bitcoin. Makes sense. So Bitcoin pulled back a bit, and this thing pulled back a bit. This thing is trying to rally, although Bitcoin is nearer its all-time high. I think this thing should be doing a little bit better, don't you think? This thing should probably be up here somewhere. Should be a little higher, relatively speaking, and it's not. So these altcoins are not really, there's nothing going on. And I suspect that one of the reasons why these altcoins, because again, people just like to throw words around. Altcoin season, altcoin season, we're going to be rich, we're going to be trillionaires. Nonsense. People don't pay attention to one important factor that no one seems to talk about in the altcoin world. Okay, and that is the bond market. The bond market. Yes, the bond market. Let's take a quick look at the bond market. And the reason why the bond market's so important to everything is because this is where cheap money comes from. And if there's no cheap money, the altcoins, which are highly speculative, are not going anywhere. They are not going anywhere because people need cheap money. They need extra money to be like, oh, I'm going to gamble on the altcoins. We saw a jump with the election, but that was an unusual situation. People were just being mindless and moronic, right? And they were all jumping in because, Dogecoin, blah, 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 blah. But that, as you can see, there's no follow through. And I suspect that has something to do with the fact that people don't have any money these days. And they don't have money because rates have risen. This is the bond futures, right? And when the bond price is inverse to rates. So in fact, instead of looking at this chart, let's look at the rates. US 10, Y. Okay. These are the bond yields. See this? See this? These are interest rates. The 10-year note, which comes from the 10-year note. This affects home loans. This affects a lot of loans, all types of borrowing money. Yields are not going lower, are they? Yields have risen. I mean, look at this. Since what? 2020, yields have just risen. This means money's harder to borrow. This means money's tight. The Fed has taken, or actually not even the Fed, the market has just priced in whatever, because this trade's apparently, or in theory, trades in a free market, right? Floats in a free market. So the market determines the price of money or the cost of borrowing money. And look, this is a consolidation, is it not? This looks like it's ripe to break higher, not lower. That's the way it looks. Now, the current administration has been pressuring the Federal Reserve to cut rates because they want these yields to go lower so that people have more money. So, in my opinion, I could be wrong, but until these yields break lower, altcoin season is going nowhere. There's not going to be an altcoin season because people need a lot of money to throw at the altcoins. That's what asset bubbles are all about, right? So, no bond. If the bond market's not favorable, I don't know where that money's going to come from. What are people going to do? Start printing their own money? So that's the thing with that. That's an important thing that you need to pay attention to that people just don't pay attention to. If we break out, if this breaks higher, that's going to be harder on people. That's going to be harder on people who borrow money. There'll be less money borrowed, and that's also going to be hard on banks because banks own bonds, right? They have these large bond positions. If this breaks higher, right, that means bond prices are going lower. The bond futures, right? The bond prices. And banks are long a ton of bonds. So this is where bank failures come into play. And the Federal Reserve and the Treasury, they're going to have to try to fix that situation. And they're prepared for it. I believe they're prepared for that because rates are refusing to pull back. All right? Does that make sense? So if we're going to have altcoin season, we need to see a pullback in rates. Now, again, we had like a secondary altcoin season, I guess around here somewhere, while rates were rising, right? But since then, I mean, rates have been just sitting up at these highs, and that basically wears out the money supply as far as what you have in your bank account. It just basically pulls money out of the system. And if money is out of the system, what's going to fuel the altcoin season, right? So that's why I suspect Bitcoin pushes new highs because Bitcoin attracts all the attention, but there's no money chasing the altcoins. That's why these altcoins are relatively weak, which is a sign. If Bitcoin pulls back or we get that broad wave too that I talked about, these altcoins are in trouble, right? I mean, because they're relatively weak. So if Bitcoin has a major pullback, I wouldn't want to be long altcoins. That's all I'm saying. So that's not a forecast. I don't know if we're going to see that, but you just have to be prepared for that kind of risk. Does that make sense? All right. So let's take a look. Let's go back to Bitcoin here. Let's go back to Bitcoin and let's see if we can find any signals relative to the analysis that I just gave you here. So our general conclusion is Bitcoin is bullish, and our general conclusion is we're going to break to a higher high and likely test 113K, right? Maybe over the next few weeks. That's the general idea. Can I find swing trade ideas based on the Trade Scanner Pro that align with that? Okay, let's take a look. So we'll start with a 30-minute chart. Let's look around. What do we have? Let me turn the Trade Scanner Pro on, and let me turn on the you got to make sure you turn these controls on. When you're dealing with the Trade Scanner Pro, if you get the Trade Scanner Pro, you got to turn these things on. All right. Now, our general trend is bullish, so there's no need for counter trend mode in this. I'm looking at a 30-minute chart, and right now there's nothing here. Okay, I don't see anything on the 30-minute. I managed to buy a token. Oh, this guy again. Come on with these bots. I can't block these guys, man. I don't think I can block these guys. Let me see. None of these functions work. Ignore these pre-sale. These guys are spammers. So no signal here on the 30-minute. Let's check the 1 hour. Anything? Nothing. Look, there was a signal on the 1 hour. Check this out. Check that out. So if you had the idea for Bitcoin being bullish, and I mean, let's take a quick look. What does that look like? What would that have looked like in real time? If we play it back, okay? Now I know this is after the fact, but you have to imagine this in real time, right? Doing these playbacks. Look at this. There was the signal. That was what the signal looked like. You see that? That's what it looked like at the time. So you had the candle close right here on the blue line. It fooled around the blue line. Remember, this is an hourly. So you had a little bit of time before it continued, and it broke the initial high there, the hourly high. What time was this? This was today at 10 o'clock, 10 a.m. Is that right? So, yeah, look at that. And as it continues, look, it goes to the profit objective. Look at that. On the hourly, that's a lot of money right there. How much is that? So your risk in this situation was 1,400 points. That's kind of a lot, right? You want to definitely adjust your size. But your reward objective was 2,200 points in 3 hours. That's pretty good for 3 hours, I'd say, right? And the Trade Scanner Pro could have signaled that for you if you were aligned on the right side, if you had done your analysis, right? Bitcoin is generally bullish. So you had a higher low, and then a signal appeared on the close of this green candle. You could have used the Trade Scanner Pro. You could have went to your on TradingView. You could have went here, right? Where is it? Oh, I can't do it in this mode. Hold on. Let me turn this mode off. Well, let's just continue this trade. Let's see where it goes. It goes to it went to the profit objective, and then and then that's it. Like it went to the profit objective, and the trade closed or whatever, right? Because it went to the profit objective. But this trade is actually still in play. All right, actually, in theory, this is still in play. So let me turn off the what do you call it? Let me turn off the replay, and what was I going to say? In this situation, I lost my train of thought. Oh, you could have captured this, right? And you could have taken a piece out of that in just a few hours. It's pretty cool, right? So the Trade Scanner Pro could have given you that guidance, because here you had the close. Once you have this close, it's pretty strong close on that hourly, and off you go. And it went to the profit objective. And this trade actually should still be in play. All right, but when it goes to the profit objective on the replay, it closes the trade. So that's why the trade vanished. Does that make sense? All right, that's the hourly. Let's see if we can find any trades that are in play right now. Like for example, a trade like this, it's in play. You're not going to get involved now. You're not going to do anything with this now. But let's take a look. Let's take a look at let's see, a 2-hour chart. Nothing. How about a 4-hour chart? Anything? Nope. There was a trade back here. When was this? That was 15:04 on Monday. That's today? 15:04? Oh, I'm gonna. That's strange. Okay, well, 15:04. Oh, this is a 4-minute. I'm like, wait a minute. That's weird. Okay, the 4-hour. So here's the 4-hour. There's no signal here on the 4-hour. Make sure I'm looking at these properly. That's a 2-hour. How about the 3-hour? Now I'm jumping around. Oh, there's something on the 3-hour. All right, now I'm jumping around, not to jump into a trade, but to see if there are any trades present. Now look at this. There was a trade that was generated back here. Now remember, we're assuming that we're looking for longs the whole time, because the analysis on Bitcoin really hasn't changed. It's been bullish. And look, you had a double bottom here. So ideal location to look for longs. You get a massive candle, closes strong, generates a signal. This was on Thursday the 15th at 11 o'clock. Okay? It was a few days ago. Signal was generated here. You see that? Since that signal, it's spent a number of hours. Look at this. These are 3-hour candles. You had a couple of entrances, like you may have taken some pain, but your stop was never touched. If you bought it at the blue line, you were risking 2,100 points. Okay, this is a swing trade. You had to take some pain. Inside of this pain, if you're aggressive, you perhaps can add to some, or if you don't add to some, look, you had another chance of a break of that blue line. If you missed the trade completely, there was another possibility of getting involved there, right? And if you missed that one, there was another possibility to get involved here. And if you missed that one, there was another possibility to get involved here. So there were like 4 possibilities there, and now this trade is green. And also, look at this. The profit objective was reached. You see that? So this is how you use the Trade Scanner Pro on the bigger picture. Notice, I'm not interested in shorts. Okay? Man, these guys are annoying. Ignore these guys. I can't remove them from the chat. All right, you guys following me so far on that? I got to complain to this platform that I use because I can't kick these guys out. Do you guys see that? A and whoever else is watching. Who else is watching? Do you guys see what I'm talking about? So this is a swing trade idea using the Trade Scanner Pro. Now remember, it's not that I just pulled this up and said, "Oh look, I'm just going to get long." My analysis has been bullish the whole time. So you have to do your analysis first, right? This was pretty clearly bullish. There was nothing bearish about Bitcoin. This was a higher low. Bitcoin was never bearish. Okay? It was never bearish. So you have your bias. You're working on the long side. You're just waiting for long signals. And you could set your, this is what I was trying to do. This is what I remember now. What you do is to catch something like this, you go here, right? You go to this where you can add a notification on TradingView, right? And then it should pop up it should give me where's the box? How come the box isn't popping up? It should give me a box. Oh, okay. I guess I got it. All right. So you set it up that way, and then it will tell you when you select the Trade Scanner Pro. It should give you the choice of using the Trade Scanner Pro inside of that. And then it'll tell you like when an event takes place, meaning a new signal pops up or a profit objective is reached, you will get a notification from TradingView. Okay, I don't know why it's doing this. All right, I don't want those. Does that make sense, you guys? So that's how you use this thing on the larger time frame. I know it's not intuitive. You're not going to learn this from a book. I need to demonstrate this. I need to show this to you. That's how you're going to learn how to do this properly. I suspect that the mistake that most beginners make with this is they wait for a signal to pop up and they'll go, oh, okay, I'm going to get long. But if you haven't done your analysis, what if this was like something, what if this was at a major resistance and you're getting a double top and then you're buying something that's likely to turn the wrong way and there happens to be a long signal there? That would be inappropriate, right? We want to align with the general trend first, and we want to find signals that align with the trend. So if this happened to give a short signal, let's say it just gave a short signal here in counter trend mode, you would ignore that. We're not interested in short signals. Maybe if you went to like a 5-minute chart, for example, right? And the market was doing this at the time, or the market was doing this over here. See this? The market was doing this. You're going to get short signals in there. You must ignore those. You're not aligning with the market unless you know what you're doing and you're taking aggressive trades and you understand the limitations of such a trade. I would not recommend that for beginners. Align with the bigger picture. Wait for signals on the side of the bigger picture. You must do your homework first. I have to emphasize it. It's not hard. It doesn't take a long time. It could take you 5-10 minutes. You figure out the general trend, and then you look for signals on the side of the trend. The Trade Scanner Pro is a confirmation tool. It's not a forecasting tool. All right, you guys? Okay, cool. So, so we covered a few things here today. We went over, we had some training on the economic calendar. We talked about the Bitcoin situation, right? The wave counts and how I made some adjustments to them, what the roadmap looks like, the bias that you should generally be leaning on. Okay. And there could be conflicting information in that where you get some weak bearish things going on. When you get those situations, stand aside. If it's conflicting, stand aside and wait for it to realign. Because for Bitcoin to get really bearish, we need to break some major support levels, and we're not even close. So when you get these brief pullbacks, just stand aside. okay? And look for support levels, wait for support levels, and check out my analysis because usually I'm highlighting them, right? And then we went over like what signals look like on the swing trade time frame and how to navigate them. I mean, look at this. There are so many signals here, right? You have the original signal. I'm going to highlight them. There's like 4 signals in here, right? That's the original signal. And then you have like, you could have entered over here, right? Yeah, there's some pain involved. You could have entered there. Again, you could have entered over here, all right? And you could possibly have entered over here, right? That's a bunch of signals with only one Trade Scanner Pro signal being present. But that's how you learn how to use it like that, right? I know I need to write like an instruction manual, but I don't even have time to like, you know, I just erased the Trade Scanner Pro. Hold on. I don't even have time to like, I can't even get thumbnails done. And I'm going to write an instruction manual. And Chat GPT just wouldn't know, like it just wouldn't understand. It's very, very specific. I can't write like a general manual. That would be nonsense. It would just be gibberish. Okay. Yeah, it's strong. And look, that's the way it is. We accept it. It may be hard to, some people, oh, it can't go much higher. Don't be opinionated. The market is always right. What we think doesn't matter. If it wants to be strong, stay out of its way. Okay. If it wants to be weak, if it wants to be strong and you don't agree with it, just stay out of its way because it's right. Maybe I'm right sometimes, right? But the market is always right. So when I'm wrong, I simply adjust and I protect myself from being wrong with managing risk. That's all I can do. So, do you think that 105K is a level still important to reclaim? Well, 106. 106. I give it to the round number. So we can go like we can take a look at the 4-hour chart, right? 106, which was actually what's the high here? 107 is the high, right? That's 107. So I believe, if we could go beyond 106 again, we need to break beyond this high point right there. So we broke this range, but we failed. We rejected right away, but we're back up in its face. Okay. So this is very tricky because we faked out and then we faked out again. So since the general bias is bullish, I would expect to see continuation patterns, right? Like on this time frame, like maybe inside bar or higher low or something like that, and eventually this. That is, if this market is truly strong, that is what we should see, something like that. So if we go beyond 106 again and we're pushing 107, we should see a push because remember what happened in this situation is you got a bunch of shorts that shorted this thing thinking, oh, the top of Bitcoin, right? Because everyone thinks they know the top and now they're stuck, right? They're stuck. They weren't expecting this. So now they may add to their shorts because they're like, okay, lower high, yeah. And RSI is telling them lower high, yeah, short it. And they're selling right into a pool of buying activity. I would not go near this thing short. On a 1 minute time frame, sure. 1 minute, you're only looking for a small bite. You could do anything on small time frames, long, short, it doesn't matter, right? But bigger picture, I would not go near this thing short. This thing it's still a long, and I would be looking for the continuation to go long, right? And if the next candle is bullish, you break out the high, I'd be looking for the breakout beyond 107. And we could see that potentially this week at the rate this thing is moving. Make sense, you guys? Does that make sense? How important are general markets when Bitcoin persists in upward? Well, Bitcoin is following the markets. It's not the other way around, right? Bitcoin is following. It's not the leader. Bitcoin doesn't lead the Nasdaq, all right, or the S&P. So really, the S&P and Nasdaq are the ones that'll give you a clue for Bitcoin, in my opinion. We haven't had time to go over that. I'm not going to spend time on that now because I'm going to wrap this up here in a moment. But you want to pay attention to like the QQQ. Look at the Qs. All right, man, I'm so pissed I sold this thing. I sold this thing at 464. I am such we're at 521. You want to know how much money I left on this table? A lot of money. But again, I wasn't willing to take the risk, right? I exited over here in this area, right? Look how much money I left on the table. Anyway, this is what leads Bitcoin, not the other way around. So, and now look, we have this consolidation breaking out on the Qs, the Nasdaq. We're back in this consolidation area. See this? We're back. We're fooling around in here again. So I'll tell you one thing: as strong as this thing looks, great for day trades. I'm happy to buy. I'm happy to go long on small time frames. But bigger picture, no effing way would I be taking longs and trying to hold on here. I missed the move, right? The low risk was, 40 points ago. That was the lower risk. Now I see this as higher risk. We may inch higher, but I'm not taking any chances. I'll wait for that pullback when we get the massive pullback, or at least, I mean, a realistic pullback on something like this would be like, something back to there. There's a gap there also. Something there that might be a good place to consider nibbling by, taking small positions again. But we have a bunch of supports. I'd like to see reversals because my mistake with this whole thing was I started too early. I started buying this thing too early, like around here, and I had to sit through all of this pain. I took all of this pain, which was, and I have not been compensated for the risk that I took here. If I had waited, or if I had just taken smaller bites during this, and then I could have started to add to it here, then there would have been a better chance of me staying in the position because I was just not happy with the risk. I was I had too much size on I was uncomfortable. So I was like, I'm not going to stick around. I'm going to take the risk off and whatever. Right. And I missed a lot of money as a result. So that's the leader. Okay. I used the NASDAQ is the leader, not the other way around. So again, I would be very careful. While it looks great, it's bullish. There's nothing bearish about it. I think the potential of a reversal is high up here, and I'm not willing to take any risks up here on the big picture. No, I'm not buying any shares, nothing. We have not had a real pullback in weeks. So, you know what I mean? I want lower risk, not high risk. So I have no problem being flat and waiting. So I am tempted to trade that BTC breakout. Here, let me see what you're saying there. I am tempted to trade that BTC breakout, but it's been moving right, and it looks like it's just better to. Well, look, yeah, I can give you. I can't tell you how to trade, okay? But I can. What I would say is, in this type of situation, adjust your risk. You want to trade the breakout, try, but trade smaller size, right? And don't feel bad if it works out and you're like, oh, I would have made all this money. Don't get caught up in that. You want to mitigate the risk because the risk is generally high and it could turn and do something unexpected, right? So you adjust your risk, trade smaller size or trade smaller time frames. Don't trade the daily time frame. You want to capture the broader move, maybe work on an hourly chart, maybe work on a 30-minute chart because your risk, especially if you're using the Trade Scanner Pro, is going to be smaller relative to the big picture. So for example, the risk on an hourly chart was what? About 1,400 points, and your reward potential was like 2,200, something like that, right? So that's better than 5,000 points of risk, which is what you're going to see on the daily time frame. So there's ways to adjust. So I would say try to attempt the breakout, but compensate for the elevated risk. Smaller size, smaller time frames. And if it goes the wrong way, at least you've mitigated your risk and you're not exposed to the broader corrective possibility, which, if Bitcoin fails up here at 108 or whatever, and it goes back to 100K or 95K or whatever, which is unexpected, you won't be exposed to that. You should be stopped out way before that. All right. So again, focus on the risk. It's okay to participate anywhere. Just understand the risk. Even if you're buying the high, you're buying 108 because you think it's going to go further. Oh, it's okay. Just understand the risk and quantify it. And the Trade Scanner Pro is great for that. And the more risk there is, maybe you could say, okay, you know what? The greater the risk, the smaller the time frame I'm going to trade, because it helps to mitigate the risk. All right. Yeah, well, it takes time, It takes time. I mean, it's so really as a guide for psychology, excuse me, just think of everything in terms of risk. How much risk am I taking? Am I comfortable with that risk? Yes or no? If you're not, sorry, I'm having a hard time. If I'm not comfortable with the risk, either that means stay out. Even if you're right, stay out. or smaller size. And don't be wrapped up with how much money you make, right? Because if you want to make a lot of money, especially at these levels, these aren't the levels to take bigger risks. There are times to take bigger risks. There are times to put on more size. 76K was one of those times. And I don't know if you remember, but in my analysis on TradingView and in my streams, if you go back, you can see go back and see what I was saying. I don't remove those streams. Go back, take a look. And I was saying, this is an area where you want to take risk. This is an area where you want to build positions because the risk was low. And that was clearly a double bottom, failed low situation. And now looking back was a wave 4 bottom, right? Those are the situations where you want to be more open to risk. And if you're going to trade bigger or whatever, that's when you do it, not now, not at the highs. This is where you get smaller. This is where you use smaller time frames. This is where you expect less. Even though Bitcoin, again, may go to a 113, it may go to 120. And you say, oh, you told me to expect less. Well, that's what I'm doing. I don't know if it's going to get to 120, but I'm open to the idea. And I'm willing to take chances, just smaller chances on the way up. And I will express that in the NASDAQ, not in Bitcoin. I'm going to follow the NASDAQ up there. So, and I'm going to do it with day trades. I'm not taking any swing trades. I'm not going to buy anything. If I do anything on the bigger picture, it'll be with option spreads. If I do anything, because my risk is really tightly controlled, with option spreads. So, but I haven't done anything yet. I was considering shorting SPX, like doing option spreads on the short side. But at this moment, there's no reason. There's absolutely no reason to short this thing. I don't see a reversal. All I see is a location, but there's absolutely no confirmation. If I had a clear-cut pin bar on the daily time frame or something like that, then maybe I'd be open to it. But I'd still take a smaller position. I wouldn't do anything large. Okay. I appreciate that. I appreciate that. But yeah, Grego, 76K was the only time I heard you say this is the time to buy. But it was not have a what but I was not have a cent. Oh, okay, well, right, because I rarely say things like that, do I? Right? I rarely say this is the time to buy because those opportunities are rare. If they were frequent, then now I would on a 1 minute chart, I tell you to buy all the time. You guys watch my streams in the AM. You see what I've been doing, right? There's times to buy on a 1 minute, but the 1 minute is a 1 minute or a 30-second chart. What kind of profit objective am I expecting on a 30-second chart? 50 points on the NASDAQ, 60 points maybe, right? That's it. That's the potential on that time frame. But the big picture, that's another story. And opportunities on the big picture are rare. They're very rare. So in order for us to get an opportunity on the big picture on these things, first of all, we need to see a pullback. And it may take weeks or longer before we see a significant pullback. And significant pullbacks are usually provoked by some type of fundamental shift. Okay, some type of unexpected news, some kind of political thing, blah, blah, blah. And we don't have that right now. Right now, all we have is a complacent market, and everyone's having a party, and all the people that bought back here when we got the insider information. Remember the insider? That was the insider information day. Remember that? People that recognize that and bought, they're just enjoying their profits right now. Okay, and if you haven't bought, now you just have to watch this thing grind higher and higher without you, because I am not taking risk at these levels on larger time frames. I am not. So that's the story. These pre-sale guys, what I gotta complain, man. I gotta complain. Is it the same guy? Let's see. Is it the same guy? I'm gonna scroll back here. Or is it like? Let me see. Oh no, it's not the same name. Oh, cool. Thanks, That's ridiculous, man. Like when I used to use the other platform, I used to be able to like kick them out, but I can't kick them out over here. I have to send a complaint to this platform here and be like, what is the point of having the function on the thing when it doesn't effing work? What am I paying for here? So anyway, yeah, it's these bots. Like you people are going to pay attention. They're wasting their time on my streams. I mean, do they not look at my numbers? What's wrong with these people? Do they not realize like I have very little people watching me? They're better off going to like a big fake guru and doing it in their channel where they have like 3,000 people watching. They're probably will get more traction. No one's clicking on those links here. So I don't know. You guys are kind of on the dumb side. I'm sorry, I have to tell you, you bots that are, whoever's doing that, you're wasting your time, bro. That's all I can tell you. You're wasting your time. Go to a fake guru that has 3,000 people. My people aren't going to click on your thing. So just letting you know in advance. Anyway, all right. So guys, I'm going to leave you with that. You guys have any questions about anything? I know I talk too much, man. When I was at the ICTC, by the way, there's a link in the description for the ICTC. If you haven't watched it, watch it. All right, it's really cool. In fact, I'll not. I won't put it in here. It's in the description on the video. Just Google ICTC 2025, and you'll see the replay. And I got to host that thing. It was a lot of fun. Hey, Grego, how are you? Because you are the only they thought you are getting. Yeah. Yeah. Have you seen ICTC 2025? If you Google that, you'll see the replay of me hosting it. I was in the country of Andorra, and it was 2 days, 6 hours a day, and it was a trader competition. And they were competing. They had to trade against each other. The market was horrendous, and it was me and a few co-hosts, and it was a lot of fun, man. Check it out. Check it out. You don't have to watch the whole thing. It's 12 hours. I'm trying to put together like a highlight reel because I have like all the behind the scenes that I took. So I'm going to see if I could put like a highlight video, and that'd be a lot of fun if I can get that going. But anyway, oh, you've seen it. Oh, cool. Okay. Yeah. That was a good time, man. That was a good time. So anyway, so no questions. I'll leave you guys with that. Remember, I stream Monday, Wednesday, and Friday at 9:30 a.m. Eastern time. Or 9:35. That's when I'm supposed to be on. And that's when we'll look at our day trades again and employ the same tactics and techniques that I'm talking about here, but on the 30-second and 1 minute time frames using the Trade Scanner Pro. As those of you that watch me, like and a few other people that show up at that session, right? You're going to see that. So check that out. And if you haven't seen it, you can watch my previous streams. Okay, cool. Oh, I appreciate that. They just threw me in there, man. And the first day I was very nervous. I appreciate that. Yeah, it was wild. It was a good time. And Whitebit, I have to say, they have big ideas. So I would certainly be looking for more out of them. And cool. And if any of you guys do me a favor, go over to that stream and write, hey, Mark B. Markets, great job. So they could see my fans are watching it. And they have an application to sign. Like if you guys want to try out for the next one, you could be possibly one of the traders that competes. I don't know if you guys are into that, but that's cool. I appreciate that. Thanks. But put that in the go to their comments because they have like no comments on the videos and put, hey, Mark B. Markets, great job. If you can, that would just be cool to see. All right, you guys. All right, I'm going to stop talking now because I talk too much. All right, so guys, enjoy the rest of your day, rest of your evening, wherever you are in the world. And thank you so much